Well, on the refi side, it's just 100% about rates and the incentive of that borrower to refinance their loan. On the purchase side, rates obviously impact affordability, but it's also about availability of homes and inventory, as you all know, extremely low. And that's what this chart is showing. Blue is showing existing inventory, call it 3.5 months of supply, just about 1 million homes for sale nationwide. More normal world, we'd expect about 6 months of supply at the current sales pace, between 2.5 and 3 million existing homes. The lock-in effect, the fact that a homeowner with a 2.75% rate on their current mortgage is just resistant to selling that home because they'd have to give up that low rate mortgage and take a market rate mortgage today, somewhere between 6.5 and 7. So that's going to continue to constrain the amount of existing homes that come on the market. But, to some extent, builders have come to the rescue. And that's what that orange is showing, that if you look at the inventory of new homes on the market, we're between 7 and 8 months at the current sales pace, getting close to 500,000 homes. And the gray line really tells the story here, that where in a normal world, you'd expect 5 to 10% of homes on the market to be new construction, we're in a world where about a third are. So if you're looking for a bright spot in the purchase origination market right now, it really is with respect to new construction. And we expect that's going to continue as we go into 2024. And then showing that here, look on the right side of the page, our forecasts for new home sales and single family starts, so construction of new single family homes, up sort of low double digits, 10 to 15% in 24 compared to the pace in 2023. So builders bringing some additional supply onto the market. Now you'll see here that we also are forecasting an increase in the volume of existing home sales. We expect for full year 2024, that'll be up about 5% compared to where we were in 2023. So the lock-in effect, the lack of existing inventory that I talked about on this prior slide, absolutely, that's still going to be a challenge this year. All we're saying is it's going to get a little bit better. So why would it get a little bit better? Well, think back to our rate forecast. We think that mortgage rates are going to drop from the close to 7% range where we are now to closer to 6% by the end of this year. And that makes it just a little bit less painful to give up that really low rate. So there's just sort of math there. And then I like to say the other and probably more important factor is life, right? That just because mortgage rates were at record lows a few years ago and then more than doubled in 2022 and stayed high last year, doesn't mean that people stopped living their lives. They kept getting married, having children, getting new jobs, having to move for various non-financial reasons. And the further and further we get away from those record low rates, I think the less hold that lock-in effect is going to have on potential sellers. So I think we will see some additional inventory hitting the market.